Hey everybody, it's Pete Carmasino here at Chaikin Analytics. This is our halftime show here on StockCharts TV. We do this every Monday. Been on vacation for a little bit, so appreciate you taking a look at some of the previous videos. But we're going to refresh one here today. It's July 18th, and we got a lot going on in the markets. I mean, just overall, you're just seeing markets in general in a broad risk on kind of a trade. I mean, I'm looking at just my other system here. Just looking at things like even natural gas is rallying in a big way today, but you're just seeing across the board, like the S&P up about 30 some odd points or so. You're seeing the Dow about 0.5%. You're seeing Russell up 1.25 or better. So you're seeing some rebounds. I know it came from oversold levels, and that kind of happens. And it just obviously the consensus has swung as far as interest rates goes. The hikes between 100 basis points to 75, both are higher. I mean, so it's not like we're out of the woods, in the markets. But the idea is that it's just not as high as quick, and so maybe the bit of a pause or slowdown is just better. But it's still higher, and it's going to be significantly higher. So the other things that are happening, you're seeing some supply chains issues, some ease a little bit, and that's getting better. And obviously, so the markets are kind of really searching for the best possible news they can find and get a hold of, but they're always in the Goldilocks scenario, the theme of perfect inflation, 2%, not too hot, not too cold, just right. Everything goes along hunky-dory, and it's great. But typically, it's hard for that to occur at these levels because you've got commodities had a huge run higher, then they sold off, and now you're seeing a rebound again. In natural gas, the trade there has really been extremely volatile. And I'm just looking at the quote right now at around 7.5 on the futures quote on the natural gas. And so, again, there's just a lot of push and pull. What I'm going to do is I'm going to go over some sector looks. I'm going to look at the S&P. We're going to talk about a few different rallies inside the markets there. And we're just going to look at some names that are overbought, believe it or not, overbought names that have sort of negative Chaikin money flow and maybe setting up for continued downward trades, or some ones you want to avoid. Don't get caught in the value trap. Okay. A lot of people are saying, look, these stocks are at $300-400. Now they're trading at $100 or $150. That's not relative, right? I mean, it obviously is to a certain degree, but you've got to put it in perspective. Okay. So let's look at the charts and see what we see. All right. I'm just going to start with, kind of the things I share with some of our subscribers, all of our subscribers, obviously, through video and through the notes that we provide on a week-to-week basis and daily basis. And so just looking and counting these rallies from this level, and people are asking me, why am I counting it from this level? Well, it's really the first big sell-off, in the markets. And I call that rally 1. This is rally 2. I think we're in rally 3. I don't know for sure. It certainly seems like we are. I mean, we bottomed out at around 36.25 or 36.35. I don't know the exact number here. Let me pull it over. It was like 30. The low was 36.36 actually. And so, now we're trading at around, like I said, we're seeing almost 3,900, right? So you talk about a move like that. You're talking about, let's see for sure, about almost a 7 or 8% rally. So anything above 5% I count as a rally, right? In a bear market. So these bear market rallies can happen. They could be 2, 3, 5. There could be 6 or 7 rallies. The issue is that no one knows for sure. Everyone's going to look at the past and say, well, typical bear market has X amount of rallies. I wish I knew for sure, but I do track it, and I'm kind of just trying to call it as I see. So just be cognizant of that. On the S&P, when we look at the S&P chart here on the stock chart system, I drew this several months ago. I actually created this head and shoulder right around this March timeframe when that second shoulder kind of completed. And then it rallied against me. And, again, not against me, but sort of the call that I was trying to make here. But then our target was 37.50. Now, we've been kind of sitting around that and kind of just migrating and back and forth. But the new level that I'm kind of looking at now is somewhere around 33.50 to 33.80. Let's call it 3,400, right? I mean, 3,400 is still about a 30% pullback from the high. This is a little worse, and this doesn't mean it's going to live at these levels for a long time. They probably could trade, I don't know if it's a capitulation trade or whatever it could be, but you start to get back to those pre-pandemic highs and lows, right? I mean, you start to look at some of these areas, and that's not pre-pandemic. This is after the pandemic. September 2020 low is 32.90, but if you the lows of during the pandemic were much worse, but if the highs were somewhere around that 3,400 level, and so it just seems that it could migrate to those areas. And I just wanted to kind of call that out to kind of look at the overall market and just get a perspective. Don't want to get caught into, oh, have we seen the bottom? You're seeing that all over TV today, financial news media talking about bottoms and this. There's no way to know that, so let's not get caught up in that. And looking at crude again, sell off right to our support level of around $90 per barrel. It's kind of living on some long-term trend lines there. It has not broken down yet. There is some moving averages are starting to cross. You're seeing the the 55 cross under the 100. It's not a significant. It is a change in a short-term level, but that long-term trend is looking like it's holding. And if you just let's start looking at some of the bigger sectors that people are popularly following, like the technology using the XLK, the Spider technology fund. Now, look, it's definitely in a downtrend, but from a relative standpoint, it's been really, really underperforming, obviously. But looking even at the beginning of the year where it started around 167 and it's gotten down to about 122, the negative trend is still intact, right? So just be cognizant of that. And from the other side of the fence, if we want to look at sort of defensives like the staples, you can start to see where they've been in a better situation, a better setup relative to the SPY. You can see the upward trend, right? If I go back to XLK, you can see obviously the downward trend, right? And so you can look at that any way you want: value versus growth, again, defensive versus offensive type stocks, names that are risk on, risk off kind of a thing. And so you're going to see these rallies. You just got to be careful not to get too caught up in them. Okay. And so, as I promised, I'm just going to go through some names that I called out and that you can see here on the Chaikin chart. And don't forget, I mean, the main purpose of what we're talking about here is that you can add the Chaikin power gauge to the ACP platform. And again, it's for stocks only, right? It's for stocks only. So I'll pull up just Goldman Sachs real quick because that was a name that reported today and it's having a great rally. We're bearish on the name, okay? And rightfully so. Look at where the trend has been, and obviously relative to the SPY, it's actually been underperforming the market itself. So that's pretty bad. If you kind of look at what's happening here, we're at really low on financials. Earnings and technicals are shaping up a little bit better, but overall very fundamentally rated, and we're kind of negative. But that's where you can find the Chaikin power gauge, and go in here and pick up the plugins right there. You scroll through, you'll see our Chaikin power gauge here. That's how you pick it up. So I just wanted to make sure that you were aware of that. So getting back to the Chaikin charts here, just looking at some names that I did a screen, and I was trying to find names that had negative Chaikin money flow, but were overbought based on our standards. We have an overbought, oversold indicator. Now, I want to kind of live in the bearish names, right? I don't want to get into trying to figure out if one of these neutral names is starting a new trend or whatever the case may be, but I want to stay in the bearish names. And I'm just pulling these names. I don't know these names off the top of my head. It's Motorcar Parts of America, right? Now, this is obviously in a downtrend. You don't need to be a technician to see that. But if you look at the power gauge, it's pretty negative, especially even on the experts. And so when you start to see these names get overbought with these big rallies, these are opportunities to potentially either still avoid, or even if you'd like to kind of play toward the negative side. Some bigger names, here's Camping World. Now, I'm a fan of Marcus Lemonis. This is his company, but even in this particular name, it's been in a pretty downward trend. Now, you can imagine high gas prices, high interest rates, probably not the best time to be buying, an RV or becoming an RV owner in this environment. Maybe it is. Maybe the prices are down. I don't know. But maybe to operate that vehicle is pretty expensive at this particular point. The negative trend has been in attack for a while. But again, when you start to see overbought signals with negative relative strength and negative Chaikin money flow, you got to take a little caution there. You got to take a little bit of a pause. Okay, and let's look at John Deere. Obviously a name in the machinery business. You think of John Deere, you think of Caterpillar, but John Deere is coming up on the list. Again, a bit of overbought setup, a negative relative strength that's been intact now for a little bit. And now you're seeing that Chaikin money flow get negative. Now it's up. A lot of things are up today. The whole markets are up. As I said, a lot of oversold situations where people are kind of taking advantage of lower prices. But again, I don't know if it's an all clear kind of a thing, right? You got to be cognizant. You got to be, understanding of the environment, right? Five below, like a specialty retailer. Let me just close that Chaikin power gauge there. And you can see, obviously, the trend is there. But again, overbought and negative money flow, which is now just fresh negative money flow after getting bullish. Now, look at the last time it was overbought. It got up to this level of around 137 and moved all the way down to 110 and change. I don't know if it's going to do it again, but my point is that you're starting to see these things. And this is also, you can almost call this sort of a double bottom. Now, if 111 is broken on the downside, you can obviously, see further downside. So again, be careful when you're looking at these names. These are names kind of to sort of second guess, so to speak, right? Maybe they're oversold and maybe they're very low from where they're off their highs. But they just might not be ripe enough to start picking at. You know what I'm saying? So you got to be careful. Here's an interesting one. The St. Joe company, it's a real estate and management and development company. Big move lower from 60 and change all the way down to, the high 30s. But a recent relative strength change with an overbought setup and negative Chaikin money flow. Again, these are ones you want to take pause at. You don't want to go and rushing in just because the price is cheap. If I look at a 5-year chart on any of these names, you should always look at a longer term chart. You can see where they've been and where they've come from, right? I mean, $16, $20 a share all the way up to 60, and now starting a new trend on the downside. Just be careful, okay? Just not saying it's going to happen. My point being is I'm calling out changes and obviously things that might alert you to the fact that the bottom may not be in all of these names. You got to be very, very careful. And then I'm going to look at this one. This is an interesting name. Again, from a consumer standpoint, new home sales slowing. Think about it, right? Think about the environment. Sleep Number, they sell beds. It's been in a pretty negative downtrend here now for a while. Now, they've probably had some supply chain issues. I don't know all the fundamental situation on this particular name specifically, but I do know the technical picture at a glance. I can tell you, obviously, it's been negative, and it's really getting a negative again. You're seeing a bit of a pullback higher. It's overbought, negative money flow. It's just a tough chart to really get behind and kind of believe in. And last one, I don't know this name. Let's just look at this. STRS is the symbol. It's the Stratus property. Another real estate name. That's interesting. Not a very large name, so not, again, worth looking at. But when you look at the industry in general, that real estate sector has kind of been underperforming. And how do I know that? I can go back here and I can go look at XLRE real quick. We'll end it on this. And I'll look at sort of the situation where, again, this was an inflationary protection, but it's starting to lose steam, right? And you can see that relative to the SPY, it's starting to roll over. Now, it had a good run in the beginning of the year, but really got slammed when rates really started to rise. And you can see that's right around after the Fed's first rate hike. And so when you see that, it's time to take pause and kind of take a step back. We're in a low liquidity environment right now during summer. Just be careful. All right, everybody, that's all we have for today. Again, time flies when you're having fun. Again, Pete Carmasino here at Chaikin Analytics signing off for this week's halftime show on StockCharts TV. Take care, and we'll be back next week. Take care.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.